There is a profound sickness lurking just beneath the surface of the glowing green numbers on your screen today. If you look around at the physical world this year, the narrative is utterly suffocating. A structurally exhausted global economy, stubborn inflation slowly choking the working class, and a geopolitical chessboard that feels one wrong move away from catastrophe. Yet, when you turn to your brokerage account, you are suddenly transported into a completely different, almost hallucinatory universe. The indices are violently tearing through all-time highs, defying the very laws of financial gravity. It is enough to drive any rational person to the brink of insanity. You sit there, looking at the macroeconomic decay out your window and the euphoric tickers on your monitor, realizing that the fundamental tether between reality and the stock market has been entirely severed. Financial mindset welcomes you to the precipice of what might be the most deceptive wealth transfer in modern human history. We are standing at ground zero of a psychological war, and if you want to survive the brutal truth of what comes next, I urge you to hit that subscribe button right now, as your support is the only thing that empowers this channel to keep exposing the dark machinery of Wall Street. What we are watching unfold is the ultimate, terrifying game of financial chicken. In one lane, driving a bruised, battered vehicle is a global economy buckling under the sheer weight of sovereign debt and vanishing consumer purchasing power. Barreling down the opposite lane, accelerating at a blinding speed, is the ferocious, unstoppable monster of artificial intelligence FOMO. The intoxicating promise of an automated, utopian future has completely blinded institutions and retail investors alike, making them entirely numb to the economic rot happening right under their feet. And right there in the middle of this catastrophic collision course sits the mainstream financial media, smiling as they lay a very deliberate, sinister trap. Every time you open an article or turn on a financial network, you are aggressively shoved into one of two polarized cages. You are either beaten down by the bear camp, terrified into liquidating your life savings because the apocalypse is tomorrow, or you are hypnotized by the bull camp, brainwashed into believing that if you don't pour your last dollar into a mega cap tech monopoly today, your grandchildren will live in poverty. They do not care about your financial freedom. That binary narrative is mathematically engineered to farm your anxiety, harvest your clicks, and bleed you dry through impulsive trading fees. I refuse to let you fall victim to that binary illusion. Today, I am pulling you out of the noise, the emotional manipulation, and the media-driven hysteria. We are going to step into the shadows and pry open the third door. This is the unspoken, highly probable reality of this market. A reality built on cold, unyielding data and historical precedent, stripped entirely of fear and FOMO. But to understand the terrifying truth of this third door, we must first examine the extremes they desperately want you to believe. To truly grasp the gravity of the third door, we must first dissect the seductive extremes they use to manipulate your psychology, beginning with the blinding, manufactured radiance of the permanent bull market. If you listen to the evangelists of Silicon Valley and the cheerleaders on Wall Street, we are not merely in a market cycle. We are ascending into an automated nirvana. The narrative here is as intoxicating as it is dangerous. They want you to believe that artificial intelligence has permanently broken the economic cycle. You are fed a daily diet of algorithmic miracles, told that these half-dozen mega-cap monopolies are no longer just companies, but sovereign digital nations that will generate such unfathomable productivity that human debt, inflation, and fundamental valuation metrics simply no longer apply. It plays directly on your deepest, most primal fear of being left behind. You watch your neighbor buy a new car, you see teenagers flashing unimaginable crypto wallets on social media, and a quiet, desperate panic begins to fester in your chest. The financial media expertly weaponizes this envy, convincing you that traditional valuation is a relic of the past and that buying at astronomical multiples is not reckless, but visionary. They paint a picture of a world where algorithms cure every macroeconomic disease, masking the terrifying reality that this explosive growth is not entirely organic, but rather the result of a panicked concentration of capital. Investors are not flocking to these tech titans purely out of innovation. They are fleeing into them as lifeboats, desperately seeking the only assets large enough to absorb global liquidity in a dying fiat system. But the architects of this bullish illusion will never tell you that. They need you to keep aggressively bidding up the top of the market, injecting your hard-earned capital into the very peak of a historic concentration, effectively acting as the exit liquidity for the institutions that bought in years ago. Yet just as the intoxicating high of this technological renaissance threatens to pull you entirely away from reality, you are violently yanked back into the dirt by the suffocating gravity of the doomsday machine. This is the bear camp, an equally profitable, equally manipulative ecosystem entirely reliant on keeping you in a state of perpetual shivering paralysis. Here, the sky is always exactly 1 week away from falling. They point to the rotting carcass of commercial real estate, the historically inverted yield curves, and a global sovereign debt spiral that has mathematically crossed the point of no return. The terrifying part is that their underlying data is mostly accurate, which makes their poison incredibly easy to swallow. They show you the crumbling bridges of the old economy and tell you the only logical response is to liquidate your portfolio, hoard cash beneath your mattress, and wait for the apocalyptic reset that will vindicate your pessimism. But this is where the sinister nature of the bear trap snaps shut. By convincing you to step out of the market entirely, they willingly feed you to the silent beast of inflation. You sit there, clutching your rapidly depreciating fiat currency, watching year after year as the prices of homes, food, and energy drift further and further out of your reach. The crash they promised you, the one that was supposed to let you buy back in for pennies on the dollar, never seems to arrive in the way they predicted. Instead, you are left stranded on the sidelines of history, morally superior, but financially decimated. The media conglomerates peddling this fear do not care that your purchasing power is evaporating. They only care that your eyes are glued to their screens, addicted to the adrenaline of impending fever dream of an automated utopia, and the paralyzing nightmare of total systemic collapse lies the very shadow where the actual future is quietly, ruthlessly being engineered. Welcome to the third door. This is the reality the financial elite whisper about in private family offices but will never broadcast on mainstream television because it lacks the dramatic flair of a crash and the euphoric high of a boom. The third door is not a sudden, cinematic explosion of the financial system. It is a slow, agonizing, and highly controlled demolition of the middle class. We are entering an era of persistent, grinding financial attrition, a structural stagflation where the stock market doesn't plummet to zero, but instead melts upward in nominal terms while quietly collapsing in real purchasing power. You will look at your portfolio and see that your balances are higher than ever, giving you a false, comforting sense of security. But when you go to buy a house, pay for your child's medical care, or attempt to secure your retirement, you will suddenly realize that your inflated numbers buy you less than they did 5 years ago. The market is not going to crash in the way the bears hope, because the central banks will simply never allow the nominal price of debt to default. They will print, they will inject, and they will debase. They are inflating the debt away, and in doing so, they are stealthily confiscating the wealth of anyone who does not own the exact right kinds of scarce assets. The system is designed to keep you treading water, working harder and taking on more risk just to stay in the exact same place. It is a brilliant, entirely invisible tax, a wealth transfer so sophisticated that the victims will proudly celebrate their portfolio gains all the way to the poorhouse. Realizing that this financial apparatus is designed to slowly bleed your purchasing power rather than suddenly execute your portfolio changes absolutely everything about how you must defend your family's future. You can no longer afford the luxury of being a passive participant in this economy, blindly trusting a traditional 60-40 portfolio to save you, nor can you afford to be an emotional reactionary swinging wildly between euphoric greed and paralyzing fear. Stepping through the third door requires a profound psychological rewiring. It demands that you strip the emotion out of your capital allocation and start viewing your wealth through the cold, unforgiving lens of true scarcity and utility. You must stop valuing your net worth in depreciating fiat dollars and start measuring it in ounces of gold, fractions of decentralized ledgers, acres of productive land, and shares of deeply entrenched businesses that generate real, irreplaceable cash flow. We have to become financial survivalists, building asymmetric portfolios that can withstand the violent volatility of the tech boom while maintaining a fortified hedge against the insidious rot of currency debasement. This is no longer just about retiring comfortably at 65. This is about preserving your autonomy in a world that is actively trying to commodify your attention and siphon your labor. You must unplug from the binary matrix of the financial news cycle. Let the masses fight over whether the sky is falling or expanding. You and I will focus entirely on the architectural reality of the ground we are standing on. The rules of wealth creation in 2026 have fundamentally changed, and the grace period for adaptation has officially expired. It is going to be a brutal, volatile, and deeply unfair decade. But for those who possess the courage to look past the illusion and position themselves according to the data, it will also be the greatest era of opportunity in modern history. The modern financial system thrives on trapping you between two manufactured extremes: the euphoric illusion of an automated, never-ending bull market and the paralyzing terror of an imminent economic collapse. Both narratives are psychological traps designed to siphon your wealth, either by turning you into exit liquidity for institutional tech investors or by freezing you in cash as inflation silently devours your purchasing power. The true reality, hidden from the mainstream, is the third door. We are living through a period of structural stagflation and silent financial attrition. Central banks will never allow the system to nominally crash. Instead, they will relentlessly print and debase the currency to inflate away sovereign debt. You might see your portfolio balances reach all-time highs, but your actual ability to afford housing, healthcare, and everyday necessities will continually evaporate. This is a highly calculated wealth transfer disguised as market growth. To survive this insidious environment, you must fundamentally rewire your approach to capital. Passive participation and reliance on a traditional 60-40 portfolio are financial suicide in 2026. You must transcend the daily noise of mainstream media and focus on genuine scarcity. By shifting your mindset away from depreciating fiat currency and anchoring your net worth in tangible, irreplaceable assets, you can protect your labor and secure your family's financial sovereignty in an increasingly rigged system. Which scarce asset do you trust the most to protect your purchasing power right now? Gold, real estate, digital assets, or something else? Please share your perspective in the comments below so our community can learn and exchange ideas. If you found this insight valuable, please subscribe to the channel to support our work and ensure you don't miss our next deep dive into mastering your financial future.